Yes guys, so today we made $474 day trading the stock market in just a few minutes, but make sure you stay tuned to the end because I'm going to show you exactly how I scan these stocks and how I find them and how you too can do this on your own. What is up guys, Hector here, and today we made $474 day trading the stock market. Day trading momentum stocks, hot sector stocks, and what I'm doing right now is I'm actually walking away from the charts. I took my money and I'm running away because the market is currently open, and if I, which I have done in the past, stay on my screen looking at these charts, I'm going to be tempted, like most traders are, to buy and sell something else. And that's when things get messy. That's when you start to lose money, because what are you doing? You're trying to make more money. You made money and now you're trying to make more money. That's just simple greed. So what I'm doing is I'm literally walking around the neighborhood, taking a deep breath, clearing my mind, taking my win and walking away, because it is a recipe for disaster to stay on the charts. In the past, I've made money plenty of times, and then I gave it all back, and then a lot of the times I actually gave it all back and then ended up red on the day and just lost money. So one thing that I think is a great piece of advice is that if you're looking into day trading, or maybe you don't want to be a day trader, maybe you want to be a long-term investor, you want to eventually put some extra money that you have set aside in the stock market for a long-term hold, is to put in what you're ready to lose, because you don't want to be emotional when the market pulls back. And so it's important to put in what you're ready to lose, right? That's risk management. And then just kind of walking away, like what I'm doing right now, just walking away, not looking at the stock, not paying attention to it. Go about your normal day, because trust me, you will get emotional. And when you see these pullbacks in the market, when you have your money in a certain company, you're going to get emotional and you're going to sell for a loss. That happens plenty of times. And so what we're going to do is we're going to do a daily recap. I'm going to go over all the stocks that I traded this morning, how I made $474 in just a few minutes, and kind of talk about my thought process, how I go about finding these stocks, and how I execute and call it a day. What's up everybody, Hector here, and today we traded two stocks, OXBR and CTRD. One of them we made money, the other one we lost money. However, the one that I lost money on, I kept the loss small relative to the bigger one. So I'm going to go over the one I lost money and basically what my thought process was trading this stock. And stay tuned to the very end, because I'm going to show you exactly how I find these stocks. It's very simple. It's not rocket science, and how you can do this on your own, not having to depend on anybody for stock picks, and just start dabbling in the market. Okay, so the first one was OXBR. Straight off the bat, I lost $25 on this stock. One thing that you will learn before I get started is patterns tend to repeat themselves. History repeats itself. Same thing with stocks, same thing with the market. History repeats itself based off fear and greed in the market. And I know this looks crazy right here on the screen, right? This light portion, this is the pre-market. Everything that's in the light portion is the pre-market. I know this looks crazy, but when you start studying these patterns, it starts to make a little bit more sense to you. So as you can see, look at these spikes. Look at these on a very basic level. Look at these spike ups. Look at these push ups, reversals, a little bit of consolidation, then big push up, then reversal, another big push up, and then right here is when the market opens at 8:30 Central Time, where I am located. Based on what I saw on a very basic level in the pre-market, I knew, take that back, you never know, I thought it to be possible for this stock to do a quick push up somewhere around market open, where as traders we try to take what we call the meat of the move. We try to take the big move and then we walk away. I thought there was going to be more of a breakout based on what I see here in the pre-market, right? This is basic supply and demand. This is supply and demand. This is people buying and selling this stock. There's a lot of demand right here when it spikes up. A lot of people buying it, the price goes up. Basic supply and demand, and then a lot of people, right? More people are selling it as it goes down than people that are buying it, right? When it's going down. Supply and demand. And so I thought that to be close to the market open, that it could do a quick little run up, and it didn't. I think I got in somewhere around here, $3.60 for a certain amount of shares. Small breakout, then it pulled back, and I got out immediately. I did not wait to see what was gonna happen. Sure, it actually ended up going back up a little bit again, but that is not a risk that you want to take, because if it goes against you, which many times it will, that is a recipe for disaster. That is when you lose big money, and that is when you lose all confidence in the stock. So I took a very small loss. I took a very small loss, and I called it a day, right? I didn't get emotionally attached to the stock, because I'm putting my money in the stock, and a lot of times people put their money in a company, in a stock, and they get emotionally attached to the story behind the company. They're like, oh no, it's going to do great. It's going to eventually go up, and many times it will, but you have to deal with those temporary pullbacks where you might be in the red, and then you have to deal with that, the emotion that comes with that. And so as day traders, we're trying to get in and out, quick little plays in and out, and not be emotional on the trade, not getting attached to the story behind the company, right? And just taking it for what it is, right? Not holding a grudge if it goes against you. No emotion whatsoever, because in the stock market, the less emotional that you are, the more chances you have. The higher the higher. Why am I struggling to say this? The better the better the odds are for you, right? When you start being fearful, when you start being greedy, that's when things go the wrong way. So I took the small L on this stock, as you can see right here, $25, and I walked away. It didn't do what I wanted it to do. I did not sit there and continue to watch it. Took the small L, walked away. I was looking at another stock, which is this one, CTRD, which is the one we made the big bucks on. Straight off the bat, $499. So that's how I was able to make $474, roughly $499 minus 25, about $474. Once again, this looks like crazy. This looks like crazy gibberish, sticks going up and down. But the more that you study the market, the more that you study certain patterns, the more this starts to look very familiar to you. Some people might learn quicker than others. It's just based on your discipline, right? Your discipline as a trader. As you can see, this thing was pushing up, right, in the pre-market early in the morning. Big push up from $3.50 to $5. That's a big move. What did I say on the other stock? History tends to repeat itself. Stocks tend to form the same exact patterns. What does this mean right here? Right? Besides supply and demand, this means that a lot of people are looking at this stock. Specifically, CRTD, there was about 8 million shares being traded in the pre-market. Before the market even opened, approximately 8 million shares were being traded of this company. That means there's a lot of supply and demand. There's a lot of eyeballs. There's a lot of people watching this stock. You just have to do your part and be disciplined and strategically get in and get out, whether it goes against you or goes in your favor. This is where we took the meat of the move. Opened up, quick spike. That just showed me that there was a lot of momentum on the stock. However, you never want to really chase this, because this can spike up and then shoot down like it did right here. See, imagine all the people that bought right here at $3.90, 90-something cents, And then this flush. This candle means 1 minute. This flush back down to $3.60 something cents. Okay, so big drop, big emotional drop, big emotional sell-off, supply and demand in the works. Slight push up, double bottom here, held some support around $3.60. Easier said than done, guys, because you don't know what's going to happen. Easier said than done. Based on my strategy, the way I have seen these plays to work out in the past, I saw it to do a quick run before potentially failing for the rest of the day. Okay? Quick move from $3.60, it found support, spiked up to $4.46 within a few minutes. I was able to capitalize on this move. I didn't sell at the top, I didn't buy at the bottom. However, I was able to scale into this and then slowly scale out, meaning I sold partial positions as it went up, However, ready to pull the trigger and sell everything if I see it do something that I do not want it to do. A quick flush down, I'm out, no emotion. If it works in my favor, great, we make money. If it doesn't, we call it a day. And we walk away, we study the past, right? We study what happened on that trading day, and then we wake up the next morning with a clear mindset. So I was able to take the meat of the move, made $4.99 on this stock, and that is how I was able to produce $474 in just a few minutes. I was done trading by 8:43 a.m. By 8:43 a.m., I had already made my money, walked away, I went to the gym, did not want to see if it were to continue to go up or down. That's when things become a recipe for disaster. That is when you get greedy, which I have done in the past, and you will lose money. Okay, so before we shut this video off, I'm going to show you exactly how I scan and find these stocks. It's not rocket science. This platform I'm showing you all of this is Think or Swim, right, by TD Ameritrade. And I know it looks very confusing, but just like anything else, you take the time to understand it, learn it, and you'll figure out that it's not that complicated. But see these tabs up here? This is the scanner, right? These are all the stocks. The market is currently open. These are all the stocks that are in play, right? These green ones, that means they're up on the day. These red ones mean that they're down on the day, as compared to the previous trading day. And so this is Think or Swim, right? But most scanners, most platform scanners, by any other broker, will be very similar in the making. Okay, so very simple ways to filter this is volume, right? Why? Right. There's so many ways that you can filter stock. By put call ratios, that's for options trading, difference in volume, yield, percentage change, market cap, right? How much value the company has, the price at the open. I'm not sure what that means, but there's so many ways to filter a stock. But one of the main indicators is to literally think about what's making a stock go up and down so volatilely, and that is supply and demand, right? There's being a lot of volume on the stock, meaning there's a lot of people trading the stock. So I find these stocks every single day, Monday through Friday. First off, by filtering it through volume, right? I have a minimum amount of volume that I like to set. You can do 200,000 shares, you can do 500,000 shares, you can do 2 million shares minimum, and then the max, I actually just leave it blank, right? I don't want to cap it at anything, right? Because some stocks they trade it into sometimes tens of millions of shares in the pre-market, and I don't want to cap it at 2 million and then not see those stocks that are trading at 5 million perhaps. Okay, so I like to keep it around 500,000 minimum shares, 700,000 minimum shares in the pre-market. And then last, right here, the word last means the last price that it was in the previous trading day. So the very last price that this stock was trading at before pre-market, meaning the previous trading day. If it's Monday, like it is today, then the price that I was trading on Friday, right, before the weekend. So this just depends on what price range of stocks you want to trade. I have found that I want to keep my eyes on anything that is has been previously trading between 50 cents and $15. That's kind of like my sweet spot. There's a lot bigger investors and day traders that have much bigger account sizes, and they prefer to trade anything from maybe $25 to $50, right? And then there's other guys that want to trade everything from $1,000 to $4,000. Although there's probably not that many stocks that are in the $4,000 range, except for like Amazon, right? That's probably one of the more popular ones, or Shopify. So I found my sweet spot to be around 50 cents to $15. Everything that is trading between 50 cents and $15 in the pre-market, the previous day, and has a minimum amount of shares being traded around 700,000 shares is what I want to scan for. That is exactly what I want to scan for. And then, like I said, this is sink or swim, so there's a way to kind of classify what information you want to see, right? Here's that last price that you see right here, the last price that it was traded. Mark percent change is basically how much it's gapped up on a percentage basis overnight. This is the number one thing I want to see, the big gap ups, right? I want to see these companies. I want to look at what's moving these stocks. After I see the big percentage gap ups, right, these numbers right here, I basically filter out, and just everything under 10%, that's just me personally, I just kind of ignore it. 10% gap ups or higher is what I am paying attention for. Then I'm looking at the volume, right? Remember up here, I'm just literally scanning based on volume and the previous price. And then you can see this one's trading, for example, during market open at 59. It's at a 59% gap up, and there's 114 million shares being traded. So there's a lot of supply and demand. And if you know how to strategize your entries and your exits, you can capitalize on these stocks, right? And so that is how you find these stock guys. How you trade them is based on your experience and your risk management. But this is literally gold right here. This is something that I struggled for a long time to really understand how to find these stocks. You see these people making 10%. I made 10% on my money, 20% on my money on this stock. Like how? Like how do they even find these stocks, right? One thing is trading them, the other thing is finding these stocks. So that is basically it, guys. If you have any questions, comment down below, subscribe to the channel, like the video, and just let me know if you have any questions. Let's connect, let's network, and let's basically just stick together in this trader journey. Stick together, because we have to be together, because it's an emotional roller coaster, day trading. And that's it. Day trading is freaking easy and hard at the same time. And so we need people that we can talk to. Anyways, guys, see you guys later. Subscribe to the channel. Peace.